Happy Friday, ladies and gentlemen, and welcome back. It's your friendly neighborhood PM back with your top 3 points of the week. And you might have guessed it, but we're all talking about earnings this week, particularly big tech. So without further ado, let's get kicked off at number 3. And leading us off, it's Amazon. Amazon surged after posting their quarterly earnings report, beating on both revenue and EPS. But the real story here is the reacceleration of their cloud computing segment, AWS, or Amazon Web Services, which grew over 20% year over year. Now, a lot of people had been speculating that maybe AWS was starting to slow down, decelerate some, especially compared to some of their competitors like Azure and Google Cloud. But this new growth rate is showing that their money is being well spent and they're reaccelerating on that growth path. And in fact, CEO Andy Jassy even came out and said that they have not seen the pace of this type of growth for AWS since around 2022. So a lot of good things in the pocket for Amazon. At number 2, we've got Meta, which fell its largest amount in a single day since April of 2024, over double-digit decline in a single day. Now, the thing with Meta is they had a pretty solid report. They had good fundamentals, good report, but the main thing that investors are hung up on is that they had to realize a one-time tax cost of around $16 billion in the prior quarter. On top of that, they did issue that they were going to be increasing CapEx in 2026 quite substantially. Meaningful was the word that Mark Zuckerberg used, but that's alarming to some people because they have not quite seen the payoff that other hyperscalers have seen when it comes to their AI infrastructure build out. And so a lot of investors are starting to question, well, this is going to pressure margins. When are we going to be seeing the returns on all this CapEx spend for AI infrastructure for Meta? So a little bit more tumultuous of a report for Meta this quarter. And then leading us off at number 1, it's Google. Google had an awesome quarter, blowout across the board. They even posted their first ever $100 billion revenue quarter, first time in the company's history. On top of that, they continue to see surging growth on their cloud computing segment, Google Cloud, which grew over 30% year over year. Now, earlier this year, you might have seen that Google was kind of in the doldrums when it came to the whole AI hyperscaler space. The stock wasn't doing as well because people weren't convinced that their investment into their AI infrastructure was really paying off. But even so, management has come out and said on this most recent earnings results that the products that have been developed on their in-house models have grown over 200% in the past year. And on top of that, as you can see from their cloud computing growth, they are really starting to get a return on their investment, and the market is rewarding them in kind. So Google really started to take the leadership here in the AI computing space as we see it. Now that does it for your top 3 points this week. What are we checking out for next week? Well, next week, we're hoping to get some more clarity on labor market data. We're going to parse through what we can. We still might get a little bit of limited transparency as the government shutdown continues on. But whatever data we get, we will articulate here in the video next week. Now that does it for this week's video. As always, if you have additional questions, please reach out to your financial advisor or dig into the written week in review. And if you do not have a financial advisor, please follow our link and we'll get you connected with somebody that can answer all your questions. But as always, please go out, enjoy your weekend, and we will see you the same time next week. Thanks again.